Focus on Indian hotels, actually. The company has announced a 2030 strategy at its Capital Markets Day event today. Mangalam caught up with the MD and CEO of Indian Hotels, Mr. Puneet Chhatwal, started by asking him about the company's margin aspiration. Let's hear him out.
When we started or embarked on the journey of Aspiration 2022, nobody believed we'll do 25%.
Yeah.
When we came to Ahvaan 2025, when we communicated 33, that's the first time the discussions came, you can do 35, why don't you communicate 35? I think in a high growth company, you have to be very prudent while communicating margins, and this time we're saying 350 to 700, and a majority of that growth coming in new brands with a combination of capital light and capital heavy. The management will make all possible endeavors to deliver good, healthy, industry-leading margins. Now, whatever that industry-leading is, in 2 years, 3 years, 5 years, I hope we are the leaders. And that's what we can promise. But it was more prudent to promise doubling of margins coming from 16. Now at 33 last year, we can't say it will be 66.
Obviously.
Right?
So you said you will be industry leading. Even at your levels right now, you are industry leading. In fact, by the industry, it's not only India, but globally as well. So from here on, are there more downside risks to the margin? If yes, then where do they settle?
I don't think. I think the sector per se has had a great learning through COVID.
Right.
This is the only sector that worked besides the airline sector with zero revenue. So if you work with zero, you, I think, have learned a lesson for your life. And I think that is why you see when companies are announcing results on a global platform, doesn't matter whether it's a global major, regional major, top brands, everyone is reporting very healthy margins because they have got a very nice grip on the costs. So the question of downside for me doesn't arise. I think especially for India, where India stands today, 5th largest, next year 4th largest, in 3 years from now 3rd largest economy, I think it's the beginning of a boom period for hospitality, tourism and leisure sector.
Let's talk about the 700 portfolio that you will have by the end of 2030. From what you have right now versus what you will have in when it is 700, how much of that will be Taj? How much of that will be Claridge's? How much of that will be Ginger? I'm just trying to understand, where the incremental brand share would be, and also the incremental geography share. Currently, you're present in all of the metros. A lot of people are talking about tier 2, tier 3 towns, etc. So if you could give us that portfolio mix.
It's a very good question, Mangalam. I think 60% of our growth going forward will come from the non-Taj portfolio or our traditional properties and selections or in Vivanta. So a lot of the growth will come from our newer brands, especially Ginger,
right.
Is expected to grow exponentially. We expect to grow rapidly the Tree of Life brand. These are small boutique properties. However, and having said that, we have grown Taj from 50 to 120 in the last 7 years. We have grown Ginger from 46 to 100. So which was the bigger winner is the Taj. And in terms of number of rooms, of course, it will be the Taj. And it has to be the Taj. It should be the Taj because this is the world's strongest hotel brand. It has the potential to become the #1 brand in terms of scale in luxury segment across the globe.
Right.
Number 2, it's our biggest cash cow. It is not just a brand, it's an emotion. It gets us the maximum events, whether G20 or weddings or any other event happening in the country. And number 3, Tajness is what we are known for, which comes with the core values of Taj, which stands for trust, awareness and joy.
All right, seeing revenue double by the end of 2030, which is great news. And actually, the stock has been an outperformer. You pull up the chart, of Indian hotels in the last 1 month or so, and you pull up what the mid-cap index has done. It's actually been a big outperformer, and the commentary that's coming out as well is fairly strong. So that stock, in fact, over the last 1 month, it's up 10%. And we'll just plot that mid-cap index or a small-cap index as well up for you. You'll see the way the stock has outperformed. That'll be up for you in just a bit.
Nigel, sorry, just look at the market which is coming off. It's coming off sharply. And I think the reason is, I'm not sure if this is, we'll have to confirm this, but there are some outlets saying that Ukraine has conducted its first strike using these long-range cruise missiles inside Russia. I'm not sure. We'll have to confirm this with some credible news sources. But if this is true, then I think this is really bad news. I can't spot it, at least in terms of in terms of any sort of Bloomberg or the FT, etc. But a handle, Red Box Global India news handle is carrying it. I'm not sure if this is really true. Remember, just over the weekend, you had news coming in that